Hey guys, welcome back. My account just had its biggest dividend month ever, and while March was full of volatility, it was a good reminder to not get focused in on the daily chop. Buy good quality companies and you'll be fine in the long run. So grab some coffee and let's dig in. My account is sitting just above $3,776 with an account gain of around $343. My lifetime dividend payouts are $66.50, and my future projected annual income is sitting at $85.62. My dividend yield is fairly low, sitting at 2.27%, and my dividend yield on cost is 2.49%. And one of the questions I received on my last video was regarding why I don't have high yield ETFs. And while I don't currently have any ETFs in my portfolio, I might add some later on down the line. But I do have some SCHD in one of my kids' custodial accounts. You should invest based on your own risk profile and desired outcomes. For me, I enjoy directly owning companies. I really enjoy getting proxy vote emails saying it's time to cast a vote with my shares. It helps make it feel real for me, and that's part of the reason why I own 34 different companies. As of filming this video, my three biggest winners are still AT&T, up nearly 81%, IBM, I'm up 53%, and 3M I'm up nearly 44%. I'm actually really happy with the way my portfolio has performed this month. The S&P 500 was down around 5.8% in the month of March, but my account was only down $11. And while I'm glad my defensive approach has paid off to the downside, only time will tell whether or not it'll perform well to the upside, assuming the bull market continues anytime soon. My three biggest losers are Merck, I'm down 20.35%, Edison International, I'm down 14.88%, and Lockheed Martin, I'm down 19.06%. If you watched my last portfolio update, you may have noticed a decent change in my loser positions, mainly in Merck, which I was down nearly 25%, but I recently purchased more shares, which I'll talk about later, which changed my dollar cost average, DCA, which is how I track my wins and losses. And more from my dashboard, my savings account is sitting at $2,050, which is getting closer to my $3,500 goal. After that, I'll start stashing any extra savings into high yield savings account or money market account. Once I get closer, I'll talk more about my plans there. My HSA still has $2,000. The plan I have requires that my HSA is at $2,100 before allowing the money to be invested. So I'm planning on depositing another $100 so I can get that money working for me better than the 1 cent a month I get currently from interest. Next month, I hope to have an update to that, and I'll give some insight on how I'm utilizing that triple tax advantage account. I do still have a goal of opening a 529 account, but I don't know when that'll happen. My work retirement is at $11,851.07, sweet, and I still own 3 shares of Rivian. This month, I deposited $100 into my account and purchased fractional shares of Waste Management, Microsoft, Google, Domino's Pizza, Merck and Newmont. Does anyone else think that Google is cheap here? I know they are a bit of a wild card from a dividend perspective, having only initiated their first payout this last June, and it remains to be seen whether they make their dividends a priority. And after acquiring Wiz for a staggering $32 billion in cash, I wouldn't be too surprised if they don't increase it coming up. And I want to highlight that this $20 purchase in Waste Management now has it sitting at 5.4% of my yearly income. In the long run, that'll keep going up, but probably not higher than around 7%. At their current dividend payouts, my yearly dividend increased by around $1.07 with these purchases. And along with the purchases, March is my largest dividend payment month ever, with 21 of my 34 holdings paying me. In the future, I won't read all of them out like this, but this was my first double-digit month, so I'm going to enjoy this. Bear with me, guys. Aflac paid 39.6 cents, Visa with 29.2, Johnson & Johnson paid 33.8, Yum Brands at 23.9, Chevron paying $1.78 and change, IBM 76.7 cents, ExxonMobil paid $1.48, nice, 3M paid 16.4 cents, Microsoft paid 53.6 cents, Realty Income paid 66.1% for my monthly payout, Google paid 8.3 cents, Wendy's paid 52 cents, United Healthcare paid 25.2 cents, Amcor paid 43 cents, Newmont paid 18.8 cents, Bank of America paid 69 cents, Lockheed Martin paid 30.9 cents, Waste Management paid nearly $1.08, Domino's Pizza with 55.2 cents, Pepsi paid 16.8 cents, and Union Pacific with 14.1 cents to close it off. Whew! All of which was reinvested for more fractional shares, which will then increase how much I'll make next time they distribute dividends. And in March, I saw both my second and third highest payouts by Chevron and Exxon for combined $3.27. All of those total $11.12 paid in the month of March. Compare that to March 2024, which only paid $2.81. And this was my first time breaking the $10 mark in a month, which was really cool to see. So what do you guys think? Like and subscribe if you enjoyed SCHD's 24.88 dividend paid out on the 31st. One of my kids' custodial accounts received a full $1 from that record high Q1 payout, which was awesome to see. Speaking of nice to see, one of my favorite things is when dividend companies increase their dividend payouts. Of my 34 companies, 2 announced they were increasing their dividend payouts. Realty Income, stock ticker O, increased their payout by 0.19% from 26.8 cents to 26.85 cents, and JP Morgan with a very nice 12% increase from $1.25 to $1.40. All told, these 2 increases added around 89 cents per year to my dividend income, which is why next March is projected to pay over $11.49, even if I don't add any more capital to those stocks or the companies don't increase their payouts before then. So that's where my money is going, but where have my dividends come from? You know, I spend far too much of my time attempting to balance my portfolio based on some arbitrary goals I've set for the 11 sectors, but overall, I like the outcome. And here you can see my lifetime dividend payouts broken out by sector. Energy is barely edging out real estate thanks to the 2 large dividend payouts this month, but eventually real estate will become a much smaller percentage of my income. Eventually, industrial should have the highest payouts since my goal for that sector is that it would make up around 17% of my income. This in part is because of waste management. Waste management, stock ticker WM, is probably one of my favorite companies to own, and there's a few reasons for that. Around 13 years ago, I met with a family friend named David to talk money and investing. Little did I know that David was worth many millions of dollars, due in part to having started buying stocks in the 1960s. I had just started learning about stocks and was interested in stock trading. I had very little capital at the time and wanted to trade my way into wealth. So I was shocked when he opened up his Scottrade account, which then became TD Ameritrade, which is now Charles Schwab. Anyway, and his account was worth like $1.6 million. And that day it was down around $35,000. I think I must have said "whoa" out loud because he said, "Yeah, it happens, but in the long run, the market always goes up." This guy didn't even blink. I had never seen numbers like that, and the idea of seeing your account down over $35,000 in one afternoon was insane to me. But that's when he explained to me what dividends were and the value of compound interest. He didn't check his account balance every day. He didn't need to. He bought good companies that gave him the assurance during the day-to-day market churn. He made enough from his dividends to pay his normal day-to-day bills, and all of his fund money came from his other investment accounts that he had investment banks run for him. We talked about Apple, which he bought and held since their IPO, crazy, Coca-Cola, and Waste Management. Waste Management was, as he said, a strong dividend payer, a near monopoly in the areas they operate, and a green technology play. He pulled up Yahoo Finance, and we looked at Waste Management's dividend payment history and the importance of stocks increasing their dividend payouts every year. I just wish I would have actually listened to him and bought Waste Management when it was in the 40s, but it's still just as good at over $236. And who doesn't like a nice defensive stock that's up nearly 1% when the S&P 500 is down nearly 5% in one day? It's cool to see. And to close out this video, I did invest another $50 into each of my 4 kids' custodial accounts. Once again, it's not a lot, but taking the advice I've received regarding long-term investing, I want to use it as a tool to teach and encourage my kids to be responsible with their money. Remember, as David had told me nearly 13 years ago, don't worry about the daily chop. Focus on quality and be patient. Catch you guys next time.